Welcome to my weekly review. I'm going to keep it short this week. I'm on vacation in the great Northwest where the bear is eating. And then we have Happy Bears. He's not ready to hibernate yet. And we have Mr. J. Powell, Don't Fight the Fed, taking a selfie here in front of his favorite heat map where we see our stocks being mauled by the bear. Anyway, I want to take a look at the Russell 2000. And last week it had a follow-through day. It had this attempted rally on this day here. 6 days later, it gaps higher, up almost 4% on higher volume than the previous day. So we have a rally, right? Follow-through day. We're going to rally the next 2 days. It digests its gains beautifully, and then on Friday it gaps lower. 4%? Well, almost 3%. And makes this a bearish island reversal candle. So if you're trading this is a nightmare, gap up and gap down. If you're watching from the sideline, you're probably laughing at people, having total anxiety trying to trade this tape. Anyway, when I see a follow-through day on an index like the Russell, I want to see a confirmation from another index. So I look to the Nasdaq, which is a growthier type of index, and here it had on Monday, it traded higher, and then on Tuesday, it had this bullish island reversal candle. So I think, hey, maybe we're going to get this rally, right? But nope, it's rejected at its 21 EMA on Thursday and had this bearish reversal candle on Friday. So the trend is still lower. The Nasdaq has been trading below its 200 simple moving average since January 18th, so essentially all year. And, nothing good happens under the 200. So we're just going to be patient and my thesis is, you got to have a thesis, right? Expectations that the Nasdaq eventually trades down to the pre-COVID levels, 98.38. I've posted about this many times. The Fed and the fiscal and monetary policy just got out of hand, and they're going to let the air out of all this these gains here, and maybe even more. Maybe it retraces back to the 81 or the 83 level. That would not surprise me. But anyway, we take it one day at a time. And right now we're in an intermediate short-term downtrend in a bear market. So we're just going to leave it at that. Take a look at some leading stocks here. This environment, a slow growth, higher interest rate environment is terrible for growth stocks. And if you're a trend trader and trading growth stocks, this is a terrible environment. ENPH sliced its 50 last week. And this stock is just brutal to hold, but this is its character. I take a look back at 2021 here. I go a year back, and during the Nasdaq was doing pretty well last year, but this thing was still slicing its 50, trading through it, slicing it, trading through it. This is impossible stock for a guy like me to hold, because it breaks my rules all the time. But it's within its character. That's my point. It's within its character to slice its 50, fill the gap. It's not doing anything that it normally, doesn't do. That's how ENPH trades. So anyway, if you're trading these solar stocks, First Solar is the leader in this group, but it sliced its 21 on Friday, and it looks like it's going to slice its 50. So anyway, in a bear market, they get them all eventually. And take a look at the weekly here. You can see it was down like 16 weeks in a row. Formed a little base, gapped higher, but my friend Duckman says when they raid the whorehouse, they even take the piano player. So in a bear market, that's what we can expect. I want to take a look at the renewable sector. This is Constellation. It's a spinoff from Exelon. It had gapped higher as well, but now it sliced its 21. And for me, it's adios muchachos when they slice their 21. So I would not be hanging around there. This is Montauk, another renewable. You can see the cup-shaped base, and then traded higher. And then what happened? Sliced to 21, sliced to 50. And like I say, they get them all, even the piano player. Another group that I want to look at is the biotech stocks, the medical biotech. VRTX, it's showing relative strength just by trading sideways, and it's above its 50, so it's doing okay. It's just kind of treading water. And if you look at the weekly chart on VRTX, you can see this, like a 2-year consolidation period, and it's just kind of handling out now. I would imagine if the index ever started cooperating, this could be a leading stock. Another one that I want to look at is AMLX. They had their ALX drug approved, and they had it priced at $158,000 a year, which seems kind of pricey. But anyway, they issued a secondary offering last week at $32, 6.5 million shares. They're trying to raise money to launch their drug. And so this one is holding its gains, and it's above its 21 EMA. Some of the growth stocks that have been leading are now just being taken away with the piano player. This is Shockwave. It sliced its 50, rallied above it in lighter volume, and then now has sliced its 50 on Friday. Another one is Lantheus, which has had a great year. It's up, 100% or some or more this year. And it sliced its 50, rallied up to it, and got rejected, and had this island reversal candle on Friday. A couple of the, I made a video about the mega cap tech stocks, and they're just being sold. AMD, this one is consistently being rejected at its moving averages. You can see here the 21, and then this green line is the 10. Reject, reject, reject. And on Thursday of last week, it got rejected at its moving average, and it came out with news Thursday night, and on Friday sold off nearly 14% in heavy volume. Nvidia, it's a little partner, it's running mate. It's doing the same thing. If I zoom in here, you can see it's being rejected at its moving averages. So anyway, what's working? I've shown you what's not working. What is working? The oil and gas stocks. It's the only game in town. This is a Devon formed this cup with handle pattern. It's moving higher. The volume isn't impressive, and I do not like these vertical moves here. So maybe this one will handle out, trade sideways for a little bit. Denbury is another one that's been performing well. This one again, it's vertical off its lows here and formed this little base. Oxy is the one everybody likes because Warren Buffett's buying it, and it's just kind of from the 74 level back in the summer, it hasn't really done much. Just formed this little cut pattern, trades below its 50, then rallies through it. So this is not something that I'm interested in, but the oil and gas stocks are working, and that's the area you want to play in. Like I say, you don't fight the Fed, and the trend is your friend, and we never give up.